Hey guys, hello everybody. Welcome. I'm going to chat for a minute while we get some more people logging in. My name is Ben Weiss. I run content marketing here at Flippa. You've probably seen my name if you're subscribed to our daily email, which you should subscribe to if you're not getting that. There's a link on our homepage. Just click the daily at the top, but we're not here for that today. We're here to talk about all things Amazon. Woo woo! So we're going to talk about how you're going to own your future by selling your Amazon-based business. I'm personally really excited because there's just so much going on in the Amazon FBA world, Kindle, merch by Amazon, everything's going on there. It's growing every day. It's just been exploding recently, and we're seeing more and more interest than ever when it comes to selling Amazon-based businesses. And of course, people out there trying to buy Amazon-based businesses as well, which is lucky for you all. We're joined today by three incredible experts who are going to walk us through pretty much everything you need to know to get going on your way to selling your Amazon business. So we've got Kelliane Fedio of Amazing Exits, Jeremy Bell from Elevate Brands, and my colleague here, Stefan von Imhoff from Flippa. So for a quick intro to them, as we are still waiting for a couple people logging in, Kelliane, she was an attorney before she fell in love with selling on Amazon, so much so that she went on to build a 7-figure business herself, exiting that for a huge sum. She now helps brands create highly valuable, sellable businesses so they can get off that hamster wheel and enjoy true financial freedom. She specializes in Amazon growth hacking, Amazon optimizations, Amazon exit planning, and she even runs an outstanding podcast that everyone should be listening to called Amazing Exits. So check that out if you aren't already. We've got Jeremy here as well. He is the Chief M&A Officer for Elevate Brands, who are buying up everything out there on Amazon. He's focused on acquiring, launching, operating all sorts of e-commerce brands that are focused on Amazon's platform. They've already got, they're delivering over 30 million in revenue, and it just seems to be growing every day. I'm sure we'll hear some more about that. And Stefan is my colleague here at Flippa. He serves as the head of product for what is the largest marketplace to buy or sell an online business. Of course, Amazon businesses included in that. And beyond that, Stefan, just like you guys, he's been there, he's done it himself. He's built on and sold online businesses. So he's a great asset to have with us today. He'll be moderating once I step aside. And as far as that, if you do have questions throughout this dialogue, there's a button at the bottom of your screen, I believe, that says Q&A. Just chime in on there, whatever your questions are. I will be filtering through that and delivering the questions to my esteemed colleagues here. We obviously won't have time for everything, but we'll try to get through as much as possible. And if we don't get to you, we'll do our best to answer that offline. So thank you again for joining us. Without further ado, Stefan, if you want to say hello, take it away, get us started on
all right. Thanks,
Amazon time.
Excellent. Thanks, Ben. Thanks for the introduction. Kelliane and Jeremy, great to have you guys here. We have a great webinar. Let's get into it. I think the first question on everyone's mind is pretty a simple one. You know, like us four, we kind of live and breathe this world of buying and selling online businesses, Amazon-based businesses. But for the folks out there, the big question on their mind is often, why sell my business, right? If I've got a good Amazon business, I'm making money, I enjoy what I do, why sell it to begin with? Jeremy, let's start with you. Why should someone sell their Amazon FBA business to begin with?
Yeah, it's a great question. And in terms of, one of the statistics that kind of I reflect on for entrepreneurs to think about is $3 billion of capital has just come into the e-commerce space to buy Amazon businesses and other e-commerce businesses. So there's a lot of money trying to find a home. A lot of Amazon businesses had a great year last year because of COVID-19 and they had really strong performance. And the valuations for these businesses are super strong because of all this money that's recently come into the space. So in terms of, you probably couldn't pick a better time from a market perspective to sell. And what I see from a lot of the businesses where people do exit is they've built a lot of entrepreneurs like the idea of scaling a business to a certain point. And then when it gets to that point, they don't want to, they don't want to hire a team or it's taking too much of their time because it was like a lifestyle asset. So that's when they personally want to sell the business and then either take the proceeds from the sale and invest it into something else, or more recently, people are just going again. They're launching new brands and they're building those brands to sell them. So I think it's super exciting because a lot of people start these businesses with just a credit card and an idea. And if they can sell that business for millions or several hundred thousands of dollars, then, just think about the next business you could start with that capital behind you. So yeah, I think that's why, 2 years ago, there may not have been a stronger market, but today, you build a nice business, you can get a really nice exit, just like Kelliane did.
Perfect. Kelliane, what would you add to that? Obviously, valuations are awesome right now. Now is definitely the best time we've ever had to sell a business. What other reasons are there? What would you add?
Yeah, those are all great. That's a great question and all great responses from Jeremy that I would agree with wholeheartedly. I would just add that, it is right now the M&A gold rush, the mergers and acquisitions gold rush. So the demand is super, super high. As Jeremy said, there have been billions of dollars and there's billions more coming that have poured into the space from, VC and private equity to fund all of these aggregators, and not to mention all the other types of buyers that are out there for bigger businesses such as private equity and strategic acquisitions and so forth, even down to the smaller businesses, which you can self-list on a great site like Flippa. But it's a very individual decision as to when you're going to sell your business. But what we really recommend is that you always run your business as if you were going to exit it, because then you're just going to have a much better performing, optimized business, hopefully spitting out as much cash flow as possible. And I'll share with you the reason that I sold my business. It was simply a matter of de-risking. So when we run these Amazon-based businesses, most of our wealth is tied up in inventory. And that can be really risky, especially if you're only on the Amazon channel. And, just a couple short years ago, an Amazon only based business really didn't have as much value or was not even sellable in the marketplace. Today, the aggregators, like Elevate, are looking for, primarily sales being run on the Amazon platform. So, that does come with risks. And, you get to a certain point where you take on a certain amount of, let's just say debt financing to finance the inventory. And maybe you're not sleeping well at night like I did. And also you really get your biggest payday when you sell your business. So I truly believe now is an incredible time to build and sell a business. It's a path to financial freedom. It's a path to wealth building. And like Jeremy said, this awesome skill set that we've built as Amazon sellers, you could go out and do it again. So it's an incredible time and everybody should definitely have it at the top of their mind, I believe. Awesome.
Yeah, you make it sound very compelling, and you're absolutely right. I also like what Jeremy said about using the funds to start a new business. It's interesting. People do this all the time with stocks and real estate, right? A stock might be good, it might be going up, but you still sell it because you want to buy something new, right? Same with real estate. Your house is going up, but you want to sell it because you want to get something different or bigger or whatever it might be. For some reason that never translates to businesses, but it's finally starting to, and people are realizing, yeah, I can cash out, I can have my payday, and I can start a whole new different Amazon business. I can buy a different Amazon business, whatever it may be. So it's really interesting to see. And then I also like what you said about, just wanting that payday, and it kind of folds into the question of when is the right time to sell your Amazon business. It's definitely a personal decision for a lot of people. I'll just add real quick. So when I had my Amazon business, this was about 4 or 5 years ago. You're right, the market wasn't as good then, but it was still starting to come up. I had an e-commerce business with an FBA component that actually sold on Flippa. And for me, it was totally personal. It was a completely personal decision. It was a video game retailer. So we basically sold video game accessories and repair parts and stuff like that. I'd started it when I was younger. And frankly, I was just over the video game industry, right? I was just getting over it. I was getting older. I just didn't have the passion and care as much. But it was still a great business, not a tremendous business, but just a nice little business. And I knew someone, I wanted to sell it to someone that could, carry it forward and find that passion that I had lost and get a nice payday as well. And that's exactly what happened. So yeah, I mean, everyone's reasons are different, but how do you know when the right time to sell your business is, right? So really want to hone in on when. How do you know when is the right time?
That's another great question. And I would say there's a few different things you have to keep in mind. And that's why planning from the beginning is so important. But you definitely want to sell it before you get sick of it, like you were, right? It's really hard to list your business for sale, go through due diligence, go through all of that, plus run your business at peak performance at the same time. If you're sick of it, you've waited way too long. Another thing that I would add is when it comes time to sell your business, you need to time it so that it shows a really strong growth over the past 12 months at least, and also has a lot of growth opportunities. Nobody wants to buy an asset with a declining cash flow. You know, that's what somebody's buying when they buy a business. Just like you said, it's an asset, it produces cash flow, and somebody wants to be able to take that cash flow stream and grow it. So you need to sell on a high note. I would say that those are two of the most important things to keep in mind. And also, you know, back to growth opportunities, I think a lot of sellers get stuck in this position that they think, oh, you know, before I sell, I need to expand to other channels, and I need to go to all the FBA international marketplaces, and I need to get into retail, and I need to, you know, start, you know, running outside traffic. And, you know, all of that's great if you know how to do that. And if you have your Amazon business systematized so that you don't take your eye off of that golden goose, we like to call it, and pursue that. But don't forget, you know, you need to leave some meat on the bone for that new buyer to come in and grow it. And that's exactly what these aggregators are doing with their, you know, with their funding and with their operational scaling abilities, that they are taking these and they are just, you know, growing them by leaps and bounds. At least that's what they hope to do. I think some of them are going to succeed. Some of them are going to fail. But those are just a couple considerations. And I'm sure Jeremy has some stuff to add to that.
Yeah, I think it's 100% right. So it's typically like, I put it into two buckets. One bucket is just performance of the business and kind of the strategy and where it's at that present moment. The second bucket is purely personal. So the personal bucket is stuff like precisely what Kelliane said. I've met sellers before who have said, I have more fishing rods in a warehouse than I do kind of value in my home, and like I can't sleep at night, and I get it. So it's probably that one. The daily grind can, you know, you have a few problems with Seller Central and Amazon, and that can kind of grind people and add to the stress. And single channel risk is the biggest one. Just that kind of dependency on Amazon, because yeah, they're not the best counterparty. Every seller we speak to, even ourselves in our business, has had a bunch of problems with Seller Central, and it just makes everyone super nervous. So we get it. The one in terms of the business, it's building off what Kelliane said. You know, selling a business with a potential growth story or growth avenues of how to build it is key. I don't mind buying a flat business, because, you know, it's better to have a flat business than a declining business. That's always pretty scary, because if the business is in decline, then, you know, you're basically fighting the Amazon algorithm to get it back up top, unless there's, you know, some specific reasons for the decline. So yeah, try and sell your business. Definitely have a growth story that a buyer can kind of, you know, take the business and they know what they can do next to grow it. Because, you know, I look at kind of 20, 30 opportunities a week, and the ones that get me most interested in, the people that get the best exits, are the ones that just serve up, here's everything that I haven't done or want to do or could do. Here's the progress I've made, and here's a clear plan on how you can grow it as a future owner. And, you know, we've got a team of 53 people that do this day in, day out. And that just gets it, you know, that just gets us really interested in those types of opportunities. So yeah, that's a big one. Just having a growth plan and make sure that you sell your business, either if it's stable and kind of off a growth curve, you know, just think about that from a timing perspective.
Excellent. That's great. So I totally agree with what you said about the inventory too. That can be, you know, the fishing rod example. I had more video games in my flat at the time than, you know, I knew what to do with. And fun fact, nothing in the world depreciates faster than video games except for cars. So learned that lesson. Now, aside from growth, you know, what else makes a business really sellable? Like, you know, we've talked about how growth, you want to sell when it's going up as opposed to when it's going down. Flat's okay, growth is better. But aside from growth, what are the qualities or attributes that makes a great sellable FBA business?
I can take that one. Then I'm sure Jeremy will obviously have his perspective from Elevate. There's a lot of factors that go into it, but you know, the most important thing that drives your valuation is how much profit is your business kicking out, and is that profit margin, you know, is that profit growing year over year? And is it sustainable going forward? And so a lot goes into just that piece in and of itself, being a profitable business, not just focusing on the top line, and making sure that you have very clean records, financials. A lot of the aggregators will say, come to us as you are, we'll build your financials. But you as the business owner, you need to know what your business is worth at all times. And the first step to determining what it could be worth in the marketplace is knowing what your seller's discretionary earnings is, which is profit plus any add backs. And sometimes in the lower middle market, it's referred to as EBITDA, but it's basically the profit, the cash flow that your business is spitting out. You want that to be really strong. And you want to have some history behind you. There are a lot of businesses that just kind of came out of nowhere during COVID and exploded. And, those businesses are sellable, but I think you're going to get a much higher multiple if you at least have, at least a year, if not 2 years or more history behind you. We talked about growth opportunities and scalability. I think the simpler your business is to operate, meaning that you have it systematized, you've streamlined your operations. That kind of thing is all very important. Having strong reviews and strong brand awareness, barriers to entry. Those are just a few factors that I think all really play into the multiple. But at the end of the day, it really comes down to how much profit your business is generating, because a multiple is going to be applied to that.
Yeah,
Jeremy.
Yeah, 100% agree. Profit, profit or cash is king, as the saying goes. In terms of what makes your business kind of attractive to buyers, the sorts of things that we look at is, we sort of start with the niche. So what's happening in the niche in which that business participates in? Is there like a steady state of competitors? How are people kind of competing with each other? Where is your brand kind of positioned amongst the competitor set? So if everyone's selling the same widget that they've imported from China and there's no kind of distinguishing features about your product or your listings, then like we sort of look at that and it can feel a little bit like a commodity. So what we try to do is when we focus on building our own businesses is really focus on kind of differentiating ourselves either, from a branding, product perspective or price or whatever it is. Just to see if the business has some attributes to it that make it not just a vanilla product that's getting imported from Alibaba. So that's kind of the first thing that we look for. We also look for, how are BSR trends tracking in the niche? Has your business kind of maintained a stable BSR? Have you been the number one player or are you kind of, a challenger to the number one player? They're things that we find really interesting. We go through every single review of every business that we look at and kind of read them all because they will tell you actually what customers think and what's been going on with the brand. And, having great reviews and really good customer service, like excellent customer service generally results in good reviews. So all those sorts of things, buyers, like we do an immense amount of work when we look at these businesses and we kind of analyze everything. So just making sure that like everything's kind of buttoned up and really strong. And, good reviews come from having a great product. So, a lot of the time, if you get the product right, you'll get good reviews. And if you provide a level of customer service, you'll just reinforce that kind of review and ranking position. We spend a lot of time thinking about SEO and like keyword ranking and where does this brand sit relative to competitors. So, whole bunch of great tools out there like Helium 10 and all those sorts of things or Jungle Scout that you can use to track that. So that's important. And then, what all that means, I guess, at the end of the day is kind of what Kelliane kind of smashed is that just goes to profit. If you do all of that stuff really well, your business will make more money. And the more money your business makes, bigger businesses attract bigger multiples. So just focus on profitability the whole time and you'll do well. We also like businesses where they've got a lot of like a strong margin. So a lot of the training courses people do on how to launch an Amazon business, it's like target something with a 25% kind of profit margin because that helps you either ride any price increases or price decreases, change in manufacturing costs like that. That's something that we look at quite a lot as well. Yeah.
That's excellent. And, you mentioned niches and different niches. So as an aggregator, Jeremy, are you looking for businesses in specific niches or is a good business regardless of the niche?
Yeah, great question. So a good business is a good business regardless of the niche. Some of our best performing assets have been in like really obscure niches. So like the riches make the niches is the saying that, is the saying that we use internally. So it's kind of, one of the coolest things about my job is, and you would see it too through Flippa, is there's just so many weird and wonderful Amazon businesses out there and so many different ways that you can make money on Amazon. You can pretty much think of a product to do anything and sell it on Amazon. Like that's your best shot. So, we look at a lot of different things. There are so many buyers out there in the market today that they're probably, I've never seen a business come to market that couldn't sell because there wasn't a buyer for that business. So regardless of what category you're in or what niche, there will be a buyer out there. It's just a matter of making sure that you've got like the access to market to kind of find them. So, Flippa is a great place to help you do that. Just because so many, I shop on Flippa, everyone else does. So yeah, you can kind of touch everyone through it.
Excellent. Great. So I think this is fantastic. What I think the big question a lot of people have is around pricing, right? So we've talked a lot about growth is important, profit matters, profit margin is really important as well. But how do people know how to price their FBA business? What sort of multiples are we seeing right now in this clearly heated market? And what sort of multiple should people expect when selling an FBA business?
I can take that one first. As I stated before, the value of your business is based on usually your trailing 12 months seller's discretionary earnings, and then there's some multiple that's applied to that. And the multiple has become like the new vanity metric in the Amazon seller world. Like, what multiple did you get? What multiple did you get? And at the end of the day, it really doesn't matter as long as you get the price that you want for your business and the terms that you want for your business, because there's a lot of ways to structure a deal. So focusing on that bottom line profit number and making sure that you have good financial records so you can justify any add backs to make that bottom line as high as possible, and then applying some multiple to that. If you're talking about, and these are huge generalities, but if you're talking about businesses that are doing less than $1 million in profit or SDE, the multiples that I've been seeing out there and that have been reported are anywhere from, like the 2s to the 4s. I mean, that's kind of like a general range. But once you get over that 1 million in seller's discretionary earnings, actually you can command a much higher multiple. And then as your business gets bigger profit wise, you can even be acquired by a strategic acquirer. And that usually means that all multiples can go out the window. They might pay 10x for something if it fits within their strategic vision for their company. So it depends on the size of the business. In terms of, I think you asked the question initially, like, how do you price your business? It really depends on what market you're selling, like what kind of buyer are you selling to? If you're going to self-list it, like on a site like Flippa, then obviously you would be, adding some multiple to it, and it would be based on those factors that we talked about earlier. If you were selling, let's say, through an investment banking process, like I sold my business through, we didn't price the business. We let the market, tell us what it was worth and then worked from there. So it just depends on the size of the business, I think.
Yeah, 100% agree. The kind of financial theory behind it is the bigger your business is, the greater the multiple it attracts, and people will pay a discount for smaller businesses. So yeah, I think that the guidance Kelliane provided there was, that was pretty, that was pretty spot on. The one thing I would say is, people are getting hung up on what the multiple is. But one of the things in terms of how deals are being structured, the amount of cash that you get paid at close, maybe about 80% of whatever the multiple, the purchase price is. And then 20% of that will be deferred through like an earnout, which basically, continues to reward sellers for the future performance of the business over 1 year to 2 years post-close. And typically what I'd say is if you are open to an earnout structure, the multiple will be higher than just getting an all cash offer at close. Right. The reason for that is, groups like Elevate or buyers, it just means there's less cash that they need to put into their pocket at close. and their financing goes further, and they'll pay you those future payments with the kind of cash flow generated out of the business. So that's called like an earn-out structure. I think it's, the thing I would say is there are really good resources out there to kind of track where multiples are at. You can go to Flippa and get a valuation. Go and check the kind of big websites and just check, like, what are these businesses being listed at? If you've seen there's a business on Flippa right now which is listed at like 14 times. It's been there for a while. It probably won't sell at that price. So just go up there and just check, like, keep an eye on the market is one of the things that I say to sellers a lot, because then you'll know if the multiple is fair. So cool.
Absolutely.
I got a quick question from the audience that I'll add to this. It's directed at you specifically, and I'll relate this to what we're talking about. Adam's asking if Elevate is interested only in sellers that are selling their own brand on Amazon, or can they be resellers? And then I'll add to that, if you are looking at both, how does that kind of change how you evaluate, what something's worth if it's its own brand versus a reseller?
Yeah, great question. So we actually started out as resellers when Elevate started in 2017, selling other people's products. What I would say is, if you are the exclusive Amazon reseller of that product and there's a contract in place and it's all kind of ironclad, that's a little bit more interesting because there's some real IP that locks in that supply chain. One of the reasons why we left the kind of reselling business was because, all our inventory came from like this really disparate supply chain. And if we couldn't get any access to any more inventory, then our business basically dried up. So if you have like a supply chain contract in place, then that makes the business look and feel a little bit more like a private label business, which will help your valuation. That said, reselling businesses, they typically do trade. A lot of the buyers in the market at the moment are focused on private label. That's what a lot of, like, the $3 billion that I talked about is people trying to buy brands. So that's not to say that a kind of resale business cannot be sold. They absolutely can. I've looked at a bunch, but they'll typically trade a little bit of a discount to if you actually own that brand. But offsetting that would be, the fact that if you do have like an exclusive supply contract in with that brand, that will make it worth a little bit more. So, yeah, I think just speak to a bunch of people and try to get a feel for the market. And even if you do go to market, the one thing you're going to learn, if you don't sell your business, at least you're going to learn where the market's at for your business, which can be valuable as well, because then it takes that kind of uncertainty about how much are people going to pay.
Yeah. And that right there is what Flippa is really great for, is that price discovery. Because we're a peer-to-peer marketplace as opposed to a traditional broker where there's basically a price and the broker tries to get that price. Flippa is, it enables deeper price discovery. You can put your business out there. You can actually price it a little bit lower than what you really want, just to drum up the interest, try and gauge the level of interest from the community, and really start to identify what the right price is for your business. And of course, you're also just going to get a lot of inquiries from a lot of buyers. We've got a lot of buyers on Flippa. 750 new buyers register every single day. They're hungry, they have wallets fat, and they're looking for great Amazon businesses. So there's no shortage of interest if you put your business on Flippa. Very good. And I also like how we're kind of steering away from the vanity metric of the multiple, as we call it. That is definitely very important. And especially when you talk about stuff like earn-out agreements, where the multiple isn't as important as what's baked into the agreement. Now, that's actually a topic I think we should spend a little bit more time on, because it's definitely something that's growing within the industry. Kelliane, can you take us through, talk a little bit about earn-out agreements, why they're good for sellers and why they're good for buyers, and a little bit more about how they work for those who might not understand.
Sure. And I definitely think Jeremy will be able to answer this better, but I can speak to, like what I've seen from most of the aggregators is usually an earn-out is tied to some type of a performance-based metric. So, the aggregators will market it as, you get to share in the profits of future earnings, but you really have to be careful as a seller knowing, okay, what metrics are they going to be judging that by? Is it an increase in sales, or is it an increase in profitability or profits? And also things like whether they have any control, like does the founder get to stay on and help, drive that future profitability? So I would just say that for any transaction that you're going to enter into from the seller side, you definitely need to have a good advisor on your side. That doesn't have to be a broker. It could just be a really good mergers and acquisitions attorney. And you need to just be really careful in structuring that earnout. But at the end of the day, I mean, as a seller, you want as much cash upfront as possible. Because that's the least risky thing, right? An earnout is a what if. You might not get it. Now, most of the aggregators, I think, are reporting on how often they're paying these out. And I think like Thras, for example, says they've paid out all their earnouts or whatever, but it's still a risk, So for example, in my deal, I didn't do an earnout, but I did some seller financing, which was required as part of the deal. And, at the end of the day, if the seller, or excuse me, if the buyer doesn't pay me, then, I'm going to have to take legal action to go, get a judgment and recover those funds. So I made sure I was happy with the cash that I got. And I really try to talk to sellers in terms of looking at an earnout as being kind of like gravy. And it really just depends on the relationship between the buyer and the seller. If you have a high level of trust and you really think that that's going to continue forward, then you might be more comfortable with a bigger earnout. So hopefully that just gave some context to it.
Awesome. Yeah, I think from my perspective, so I've been in mergers and acquisitions and private equity as well, where earnouts were like really common. And the biggest risk with an earnout is making sure that you understand how it is going to be measured and calculated in the future. So the easiest way to calculate an earnout is base it off revenue, because you can just log into Seller Central and see what's going to happen to revenue. The way earnouts typically work is like, if the business did $100 in revenue this year and 200 next year, then like that's 100% growth, and that that factors into the earnout payment. There's a bunch of different ways that you kind of structure the share of the economics, but I think the main point is around just what it's based off. We've had deals where part of the kind of our investment thesis was going to save a bunch of gross profit dollars. So we sort of agreed with the seller, let's base the earnout on gross profit. But in the legal contract, we include a worked example of how you calculate that kind of gross profit metric. And if you base it off net profit or EBITDA, again, like make sure you've got a worked example of how that's going to be calculated. And there's an agreement that, the purchaser isn't going to buy the business and then allocate all the wages to that business, because, that kills your earnout. So there's a whole bunch of kind of protections that you need if you do go down the earnout route. So if you are thinking about it as cream, then maybe you're happy to take a bit more risk. The biggest point though is when you're thinking about them is, who is your counterparty for that earnout? Because if that counterparty hasn't been on Amazon for very long and they don't have any track record with growing these businesses, then how do you know they're actually going to be able to grow your business at all? Or how do you know they're not going to be bankrupt in 12 months time if this whole strategy doesn't work out? So that's key for buyers. For buyers to explain to sellers if there is an earnout, like, our track record is X, and because of that, we've been around for a long time and we're confident that we can pay out the earnout. So what we always say to our sellers is, we've been around since 2017. Every business that we bought last year, for the last quarter, they were up 99%. So that's our track record, and there's a bunch of new people that can't say that. They can promise you it, but they've never delivered on it. So understanding who your counterparty is, and whether or not they can execute, and if they have a plan and investment thesis for your business is key.
I would just love to jump back in, and that's exactly the point that I wanted to raise and forgot. So thank you for bringing it up, Jeremy. Is it's so important as a seller that, as I stated earlier, you have trust in the buyer. If you're going to enter into an earnout agreement, you have to believe that they are going to be able to grow the business, right? And so if they are just coming from the private equity world or venture capital world and don't have any Amazon operational experience, that might leave you cause for pause in terms of, really believing that they're going to be able to grow the business and pay you that earnout. So, I always advise sellers to really get to know their buyers and ask them all those questions. Ask them, what their Amazon experience is. How are they planning to run the brand? How are they going to grow the brand? All those types of things.
If you're not doing an earnout agreement, does it matter who the counterparty is? Like, do you actually care who you sell to if it's not an earnout agreement, if it's a full buyout, or does that not really matter to you guys?
If it's all cash, then they might not care as much. But most brand owners I meet, they want to see their brand succeed for personal reasons. They want to pass the torch and they want to see them grow and hopefully become, a household name, legacy brand. And I think that's important to a lot of sellers. So I know if I had my choice over somebody that I thought could really, truly run with it and grow it versus somebody who was just going to completely fall on their face and fail, I would choose, if all other things were equal, sure, there's a price for everything, but I would choose the one with the operational expertise.
Yeah, makes sense. So this is great stuff. I think the question that a lot of people might have at this point is, what is like the very first step when you're looking to sell your business? Now, we had talked earlier in the webinar about get your financials in order, make sure you're on a growth track. But let's say that's already happening. So you've got a business that's growing, things are going well. You want to sell in the next, let's say 3 to 6 months kind of time frame. What can you do now to really prepare and get your business ready for an awesome exit in about 3 to 6 months time?
3 to 6 months time is a short window, if you don't have your ducks in a row. I mean, we always advise clients to start preparing at least a year in advance. And so, like you said, it starts with clean records and bookkeeping and financials. So getting your financials in order is the number one step. And then, getting educated is the most important thing. I think as a seller, there's a lot of sophisticated buyers out there, especially with all the institutional money that's come in, and it's easy. I don't want to say to get taken advantage of, but if you don't know what your business is truly worth and what you can get for it and the terms that you can get and know what your non-negotiables are, you're going to have a really hard time at the negotiating table. So you want to have a good team surrounding you. So, definitely a mergers and acquisitions attorney. You need legal representation. And a good tax strategist, I think, is extremely important, not only to help with tax mitigation, but also to help plan for what you're going to do, financially after the sale. Because once you sell your business, you have this big lump sum, but you don't have cash flow coming in anymore. And so, that can either be a tax strategist or a wealth manager. I think those things are really important. And then, I don't necessarily think it could be done in 3 to 6 months time, but the more systematized your business, the more turnkey it is, the higher value you'll get. So putting in systems and processes. So those are just a few of the things that I would bring up.
Cool.
Yeah, 100% agree. The day, I like to say, the day that you should prepare to sell your Amazon business is the day you start it, because the better organized you are, the easier it is to get through that kind of underwriting and exit process, and the more interested the buyers are going to be. Because, if I looked at 2 comparable businesses and one was super organized and I knew underwriting would take me, I could get the deal done in kind of 4 weeks, I'd be doing that deal over the one where I need to be trying to figure out, are the accounts accurate? So there's sort of 4 buckets that I put things into. The first one is growth. So develop that kind of growth playbook for your business around what the new buyer can do with the business. If you're going to launch a bunch of new SKUs, go for it, so you can show this track record and run rate that those SKUs are going to make a lot of money in the future. Simplify your operations. Don't store inventory at your friend's house or your mum's basement. Send it to hire a 3PL and send it there, or send all your inventory into FBA. If you want to make your business more scalable, like, think about hiring VAs, think about putting in standard operating procedures around how things are done, how inventory is ordered, customer service. Like, I love to see those sorts of things when we buy businesses, because it just makes it so much easier for us to integrate. Accounting is the biggest one. Like, please, just if you want to sell your business, go and hire a good accountant. Use accrual-based accounting, not cash. It makes a massive difference if you've got a growing business. So hire a good accountant. And then the last one is, whatever IP that you have around your business, like, go and get a trademark, save down the Facebook and Instagram handles, get the domain name, like, get all those sorts of things that are really important locked in, because, there's businesses that we've looked at where we've ended up walking away because they didn't have a trademark. And we all know if you don't have a trademark on Amazon, there's risk around that and you can't get brand registry. So that's sort of, that's one of the things that's important to us. The one thing I would say is often we meet sellers and they've got like all their brands piled into one Seller Central account, which does make it a little bit messy. Messy because it's hard to know what's happening from a performance perspective. You need a really good accountant if you're going to try to sell that business. And then two, the transfer process of that asset or that brand out of that one Seller Central account can be a little bit messy because you've basically got to, send inventory into a new Seller Central account while you sell down the old Seller Central account and then assign over brand registry and all those sorts of things. So, I looked to do a business last year and I basically, the seller was in the same, sort of process position, and they delayed their exit 12 months to get their accounting in order and just run everything through one Seller Central account. So yeah, they're the four kind of things that, 4 buckets to think about.
Absolutely. Jeremy, that it's like you were reading my mind here. I've got a couple kind of logistical questions from the audience, and one of them is literally what you were just touching on. His question is, how often, and either of you, anyone can feel free to answer, how often is the actual seller account acquired versus just the products? And then to follow up on that, he's asking what impact does that have on the acquisition multiple? And are there any kind of standard benchmarks behind that?
Yeah, so the standard, the preferred approach for us is to buy the Seller Central account. With all our deals, we've done that. And the reason for it is it just makes the transition really easy. We just need to update the admin credentials, redo the tax interview, and then we're in control. And it's super simple because then the day after or a couple of days after close, we're then in charge and it makes the integration process much easier. If you do an asset, a kind of listing transfer is what they call it when you transfer the inventory to a new Seller Central account. Some people aren't equipped to be able to manage that type of an acquisition. The big risk there is if you stock out during that process, that's going to really hurt your ranking and your BSR. And a lot of buyers don't love that dynamic. So if you do want to do a listing transfer, you need to make sure you've got enough inventory so that the new buyer can start to send in that inventory immediately. And then it just gets a little bit complicated with the accounting because you just got to make sure that whatever's left in the seller's account, like they sell that down and they transfer the money to the buyer. So it can be done. I haven't seen it really affecting the multiple, but it does affect the appetite of some people may just look at it and say, some of the aggregators may look at it and say that's too hard. We've done it. Yeah, like we've done it for a few businesses with European operations, and we're certainly open to it. And we know how it works.
Interesting. If anyone has another question, throw it in. We are going to cut this off fairly soon, but I do have one other question. Really nice, simple logistical question. It might be good to close this off with. Oh, except another one came in, but we'll get this one in there anyhow. Simple one for whoever wants to take it. How long does the transfer process typically take? And is Amazon happy to transfer account ownership?
Question.
It's a great question because they used to have a rule where you had to have separate Amazon accounts. Whereas today the rule is you're allowed to have more than one Seller Central account as long as they're for legitimate different business purposes. So if you have one brand that sells homewares and another brand that sells, electronics through 2 different Seller Central accounts, that's fine. You can just create a case log with Seller Central and just let them know that you've got these 2 accounts and everything will be fine. You more get into trouble where, let's say you've got 2 Seller Central accounts and you're both selling the same pair of Nike and you're manipulating the buy box. That's what Amazon's trying to shut down. You're allowed to have 2 Seller Central accounts. The transfer process, there's a bit of an art to it. If you don't do it right, you can get kicked out of the account. So to do it properly, it takes a couple of days and you do it in small steps and kind of get Seller Central involved in it. So yeah, it can be done under a week is kind of how we run it. process, just to transfer.
Fantastic. Love that. Let's jump into this. This is one last question here. That's another good one. I'm surprised we actually didn't even come up with this one ourselves. I'll throw it Kelliane's way, because why not? Brent's asking, does having an off Amazon presence, like Shopify store, big social media presence, anything like that, increase the multiple?
It depends on the buyer. So, we've been talking largely today about the aggregators. And as of right now, the aggregators are looking mostly for, a large concentration of the business being done on Amazon, because that's what they supposedly know how to operate. And then they want those growth opportunities to expand to other channels. But having said that, the aggregators are not your only buyer out there. There's a lot of other buyer options that aren't getting really highlighted, and that existed before the aggregators came onto the scene. So again, depending on the size of your business, you might be self-listing on Flippa. And I think that could definitely, generally it will add value. I think it's just with regard to the aggregators, they might not see that as valuable and too difficult to operate. So I'd be curious to see what Jeremy has to say about that.
It's a great question. There was a business that went to sale and it was bought by one of the aggregators, and they got to close and figured out that they couldn't operate the kind of 30% of revenue that came from Shopify. And it was kind of a bit late because, they'd already committed to the process. If you said to me, I have a business and 80% of it revenue comes from Amazon, and there's this Shopify store, which I don't really touch, and it generates 20% of the revenue. Oh, and by the way, I've got an email database of 10,000 people that you can email every time you do a new product launch. That business is worth more money. So it just depends on kind of like the circumstances. We've found with some of our brands, just creating a nice website and doing it properly, people for some reason find the brand on Amazon, end up at the website and buy the product. We can't quite figure out why, because it just gets fulfilled from Amazon anyway. But it's sort of, we didn't put any marketing behind it. So it just depends. But, having a website it's a bit of a different skill set, and it's not part of the kind of playbook that some aggregators are just focused on really nailing the Amazon playbook. So taking the brand, implementing best practice, taking it to other geographies, and then they're going to worry about Shopify later. So for some of them, it's not really businesses that they're looking at to acquire now. But yes, as Kelliane said, there are buyers out there. You've just got to find them, and that's why Flippa's, it's a great place.
Yeah,
I would just quickly add, having a website to go along with your business is never a bad idea, and often a very good one. Amazon by nature kind of de-emphasizes businesses and people and brands on the platform. It's not like other marketplaces, let's say eBay or Etsy, where you're allowed to really showcase your site, your brand. Most sellers on Amazon don't even know what their shop URL is for one example. So having a website and a social presence and an email list and all the things that comes with a standard e-commerce operation, adding that to your sale is a great idea. Anecdotally, I can say that those types of businesses do get more attention, eyeballs, views, watchers, bids, and valuations on Flippa. So definitely would recommend that.
Yeah, absolutely. Wow, thanks guys. This has been great. Kelliane, Jeremy, Stefan, really good to have you.
Thank you for having us. This has been awesome.
I don't have to tell you guys, Amazon's crazy. I'll tell you real quick. I realized the epitome of the Amazon experience when the other week I bought a mailbox on Amazon. So I literally went online to buy a mailbox to get delivered to my mailbox from a digital company. You can get anything on Amazon. There's buyers for everything. There's sellers for everything. It's a crazy world. Thanks guys for showing up. It seems like there might be a couple other questions, but if you have them, that's an easy one. May I get a copy? Yes, we are recording this. We'll post it and we'll send an email to everyone who has attended. So you'll get that. And if you have any other questions after this, shoot an email to marketing@flippa.com and I will take a look at that inbox today to make sure I don't miss anything. Thanks guys, this has been great.
Thanks.
Thank you. Thank you guys.
Awesome.
See ya.
Bye everybody.